All right, all right. We're back at the podcast today. We have a special guest, Justin Petruzziello from Nations Lending. Good morning, sir.
Hey,
How are you?
Tom. How are you? How you
It's
doing?
been a long time since I've seen you.
Yeah, it has.
The last time I saw you, you were on one of my trolleys or buses doing a real estate caravan, and that was pre-COVID, I believe.
Yeah,
that was probably 2000.
That was when the good old days were. Yep.
The good old days.
The good old days.
Those
yeah.
caravans were something fun.
They were awesome. Spectacular. You know, we had a chance to interact with our realtor partners and, you know, title companies and you know, everybody together. It was a great day.
Yeah, it was a great day. Everybody served food on the vehicles. You went to 5, 6, 7 locations where there was a house for sale. And I like how you used to cluster them. So like in Tom's River, then you did a Bayville one, and there was a Brick one. So it's pretty cool that should come back.
I wish it would. But right now the
market's so
changing.
crazy, right? I mean,
market changed. Unfortunately, you know, back then you would have a property that may have sat for a little bit of time.
Yep, and that's why you wanted to kind of showcase those.
Yeah, remember we tried that, but the problem was we had everything lined up with like 17 listings, and unfortunately by a week before it started, all of them were sold. So that kind of told us this market is very hot right now.
The Jersey Shore market is still moving, huh?
Still doing great.
So it's fast. They houses go up on a Thursday, and by Sunday you have offers already on them.
Yeah, I mean that's basically what I've seen out there. If you have any whim of or hear anything about a property that's going to be listed, everybody's already marketing it on Facebook, saying there's going to be coming
soon.
Coming soon. We're ready
Best
to go.
in finals.
And then all of a sudden hits MLS, and by Sunday we have open house, and by Monday it's dozens of offers.
On a personal, funny level, last year I moved into my house about a year ago. I was, I sold my other place, and my wife had found this house she really loved, loved on like one of those Redfins type services.
Sure.
So she says to me, now anyone that knows me knows that I don't really leave work during the day. Like I'm not the guy who's got a doctor's appointment at 2. I'm the guy that takes a doctor's appointment on Saturday mornings. So she texts me, she goes, Tom, I need you to leave work at 3 o'clock today. And I was like, what's going on? And she's like, I need you to see this house. I love it. It's going to sell by the weekend. And I know that you're going to tell me, let's look at it Saturday. And there's going to be offers in. I want to be the first offer. And I was like, wow. So I call up my realtor. I said, dude, can you get me in on 3 o'clock? He's like, you're leaving work at 3 o'clock? I said, just go along with this one. I said, so we went there, and my wife loved it. And we ended up, like, by Sunday, my realtor said, oh, there's another buyer interested. And, we ended up getting it and, doing it. But to that point, as how fast it went. Like, and again, if I didn't take her advice on this one, we would have lost that house 100%, because I would have waited a day or two. And so I'm glad that, she pushed me on that one.
Yeah, you can't. I mean, right now, you could see it on Facebook. You could see it on any of the social media sites. These properties, I mean, right now you've got individual predominant realtors saying, hey, this one went over 100 over ask, 50 over ask, 1,000, 10,000.
There was something on NewJersey.com recently.
I saw it.
So what happened there?
It was basically a property that was in West Orange. It just went on, and the property had 21 offers that were on it. Because the realtor listed it, did her CMA analysis and put it together, but listed it in a scenario where it was a little underneath the 600 and some odd thousand mark, and it was enough where it caused a spike where everybody came. The final was 333,000 over ask.
Wow! But how are you going to get appraised for that? You got to come in with heavy numbers, right? You got to come in with a big down payment to get that to work. Like, I mean, in the appraisal market, if the house is worth 600, how are you getting appraised for 9?
That's a great question.
And how is you, as a lender, how are you able to write that unless they're coming in with a heavy
amount and everything? Well, let me take one step on it. When we talk appraisers, normally if you have said property, it appraises for whatever denomination. Kind of like on a refinance, you go where the market is. They pull the last 6 month sales comps, and we basically get the value from that, and that's what's supported. On purchase, if I were to sell this for $100,000, that now creates a comp and a value for that $100,000. So as long as the appraiser said that is the value and that's where we are, then that creates where the next offer comes in on. And that's basically what has been transpiring in the market. So getting those sold comps, those are the comps that are going on. So it's what the ability that somebody wants to pay. And I guess the other part would be a lot of these have been bought with cash too.
Yeah.
There's a lot of cash buyers out there, or were out there.
Yep. I guess that's the difference, because like it's like, but then you got to support that number. Like that's another thing. Like, the affordability, right?
Yes.
So I know that you have a little AI, little play on the word of the letters AI compared to what everybody else in the world, in the tech world, thinks of AI. So let's roll into your AI and talk about what you feel there, because again, I think that when you think about that buyer and who they are and what they're doing, go into your AI.
Okay. Basically, a lot of times I'll explain to individuals that what is the major hurdle that we're dealing with in our industry right now is AI, and everybody goes, "Oh, artificial intelligence."
No, they're not going to write your social media posts.
Yes, it's not artificial intelligence. It has to do with affordability, and it has to do with inventory. So let's break down affordability. Okay. So when you purchase a home, there's debt ratios that you need to be in to qualify for that home. Years ago, when you bought a home, they were a lot lower. Now we have opened them up to, basically 50% on the back end ratios on these. So here's my concern.
In the old days, wasn't it like 30?
It was lower, much, much lower. 36, 42. It was much, much lower at that time, and people were putting more money down on these properties. If you go back and look in the last few years, because of the values of these properties going up, the new home buyer doesn't have a ton of money to put down on these properties.
And if they were renting before that, that's even harder, because it's harder to save money.
Exactly.
When you're renting at the higher rates, too.
When you're renting at the higher rates. So if you're sitting here and you don't have a lot of money to put down, the normal consumer is putting 3 to 5% down. It's not like years ago where you put 20% down to waive MI and PMI and all that. Now,
I remember when I bought my first house, I had to take the PMI. And then the second house, when I flipped the first house into the second house, I was close, but I didn't have it. But I knew I was like, oh, in a year or two, I'm going to be done with this.
Right. I remember purchasing my first home, and I think I was 25 years old, and I was all nervous because my total in, principal, interest, taxes, and insurance, everything was just about $1,000. And I'm like, oh my God,
how am I going to do this?
How am I going to do this? This is a problem. Well, that affordability has changed completely now. Okay. Some of the concerns that we have with affordability are not just the values of these properties that they're purchasing, but if you're only putting 3 to 5% down, okay, to qualify, we have to take all of your debt that's revolving, that's showing on the credit report. Okay. So if you have installment loans, if you have car payments. So let's take a car payment. When we were growing up, car payments were $200, $300. Well, they now evolved to $700. Which is crazy. So if you look at that, we have to take that in mind, and we have to account for that, okay? So if we're sitting here and we look at this, and you have a back-end ratio where we can only go to like 50 now, and you're qualifying, a quick example would be if you were to take a $400,000 home now, okay, putting 3 to 5% down, and you're making $100,000 a year, you can't have any debt to qualify where our real estate taxes are, our homeowners insurance is, and I'm sure you've heard that, what's going on in Florida and all over the country. And even in New Jersey, a lot of insurance companies did leave. So you have a lot of, and the reassessments that were going on. So when you do all that, at $100,000, you should be able to qualify by yourself. Well, now you need 2 incomes to get to that 49%. Especially on a house that previous to 2020 was maybe $350 in 2019. Well, in 2019 at $350, it now is $650, $750 right now. So by putting the 3% down or 5% down, you're not really putting a ton down on that mortgage per se, right? Yes, you're qualifying, and yes, you're in there, but now that affordability is scary because you have 2 incomes to support this. Well, let's say you're guaranteed when you do a 30-year mortgage, you're saying those two incomes are going to support this for 30 years.
Yep.
When's it when you lose a job?
Yeah, that's scary.
You know, we don't know where the economy's going. What happens if we're so a lot of people.
You go back to your AI. On the other side of that is people can lose their jobs because AI is going to replace jobs, and then you start to think about like, what does that do? And again, I think it's you have to be conservative. You have to live your life, and you have to plan that if you're doing your right job at work and and you're working for the company. I think that there's job security there. But on the other side of that is like it's
scary.
It's a little scary.
It's scary. So if you look at with that mindset, we're not taking in mind one other thing, and that's something that I did not even mention. Remember, I told you that's the debt that is showing that we see. Well, there's still housing expenses.
Sure.
You still have gas. You have electric. You have and what did the gas go up? And what did the grocery bills go up? And what did you take all that on? That's not broken down to that 49 percent.
Also, you have to your hot water heater is going to go.
Sure.
At some point in time, your hot water heater is going to go. Your furnace is going to have an issue. You're going to have to do that repair to the stoop that you thought you could hold off for 2 years on. You're going to want to get rid of that carpet that has been there for 10 years. And when you first buy, you're going to want to put the new LVP flooring in. So there's other expenses that go along with this right off the bat. So, I mean, again, anyone that's been a homeowner knows that this is going to,
Yeah, without a doubt. And what had happened in the transition was when 2020 happened, obviously the economy shut down. Everybody was nervous. The government was nervous. Everybody was nervous. So basically what transpired was where interest rates were around 3.75 to 4.75, they started dropping down. And when the stock market took a little bit of a dip, our government infused money into the market. When they infused money into the market, it raised it, but not a dollar went to mortgage-backed securities at that time. So the Fed turned around and said, we're going to go Fed rate cut to 0. Everybody goes 0% interest rate. Well, it's not 0% interest rate. That's the Fed rate. That's against mortgage-backed securities and all that. And the government was buying $700 billion. They were buying on mortgage-backed securities. So they manipulated the market where they can keep those rates afloat and keep the market going. And that's what they did because they were with the stock market.
Yeah. That was a concern. I mean,
that was a concern.
Now it's kind of backfired a little bit, but
I don't think they were looking at hyperinflation.
Yeah. So now you have a real estate law change. So how does that play into this, especially with your formula?
Right. Well, that's kind of crazy with what's going on. I'm sure you've heard it because it's out here all over the place. Is the NAR lawsuit. NAR just recently, and anybody who says they know everything that's going on, they don't right now, because here's what happened. On Friday, the New York Times came out and brought it out. We've been knowing that it was coming for a while, but there is nothing that is set in stone. It was originally $1.7 billion they were going to do with a 3 times indemnity on it, which is crazy. That's over $5 billion, okay? And how it transpired was there was some sellers that were disgruntled and felt that they were not taken care of correctly on there. Now, we know realtors that we work with and predominant, and they're awesome. I've got realtors that are predominant in New Jersey that I would trust my home, everything on. I just know that they go above and beyond for their clients. So that disgruntled started the lawsuit. It was kind of relating how we got caught in 2008 or got in the middle of in 2008 where Dodd-Frank came in with all the regulations and disclosures because when the Fed gets in and you have the DOJ involved, and that's basically what's going on here. The DOJ is involved because of the denomination of money that has been awarded, okay? So all this gets awarded. NAR turns around, and they basically go, okay, we have $418 million. We are going to propose for the settlement. And that's their proposal. This all happens July 1st, believe it or not, 3 months from now, which we know. I don't know how you change all this.
The hard part is you have contracts that are going into place today in March that
Sure.
early April that are going to close in July.
Yes. Now, my understanding is that it's going to continue with the way that they have it right now till July 1st. So maybe it's something that's after. Like with us, it was application date.
Yep.
So if I took an application after when the Dodd-Frank came in play, it's Dodd-Frank regulation. So I'm assuming it's going to be the same.
Yep.
But right now, this is the hottest thing on social media. Everybody's talking about.
Yep.
You got realtors defending their positions, and because you know what, they do an awesome job. There's value added. They provide. There's stellar realtors out there.
It's hard to be a realtor.
It is.
I think everybody looks at the big sale and they're like, oh wow,
they look at the dollar.
They look at the dollar, but they don't realize like how many buyers never turn into buyers. How many times you've driven around with somebody to 50 different locations to look at houses. Also, like the average realtor doesn't make a huge amount of transactions a year. There's a handful that do.
I'm going to shock you with a little tidbit.
Shock us.
A predominant realtor. I'm not going to mention his name. We were talking about this because when this hit on Friday, my phone was inundated, blowing up with everybody talking to me about it. What's going on? Where are we going? What do we need to do? So I talked to him, and he actually gave me a figure which I didn't know. He said 50% nationwide of realtors did 0 transactions in the last 12 months.
I believe it.
Because you have a lot of part-time.
You have a lot of part-timers. You got a lot of people that are like, oh, I'm going to sell my friend's house. All my friends are going to call me. All your friends aren't buying and selling houses this year. So I totally would agree with that. I think I saw some number one time like that the average broker makes like 2 sales a year.
Right.
Something like that.
And if you break down, and again, I'm not a realtor, but to be honest with you, if you break down and look what their cost to NAR is, what their MLS costs, because each MLS is different, so there's different costs. Their marketing, their media,
and some of them have desk seats, like that hold their license and stuff like that. Like, so
exactly.
Like ABC Real Estate Company charges the broker, the agent, a desk fee. And it's not even like a desk fee, like you come in and sit at a desk. It's just to have your license hung there. So, I mean, there's other fees associated with. Again, I think that there's some realtors that do very well, but it's like any profession.
Right.
There's some restaurant owners that do exceptionally well. A lot of them are in the day-to-day of their restaurant, hustling to make a living. And I think a lot of realtors fall into that same category. I think that there's, of course, in every industry, there's your superstars.
Totally agree.
But I think a lot of them are just trying to work to pay their bills.
Right. It's just like anything else in the economy. A lot of them did some part-time and they have another job and they were just making sure. Now, the majority of them do 3 to 5. Okay. And then from there, you have the All-Stars. Yeah. And the All-Stars
What's an All-Star do? Like 10? 12?
I've seen 50, 60.
Wow. That's one
you got different organizations. Dinansky Group.
Yeah.
Blows my mind the amount of volume. You mentioned all the different companies there are out there. So let's go back with that NAR lawsuit, right? So with that in mind, basically what they said was the seller, the compensation was listed on the MLS system, right? So like how we had an issue back in the day with Dodd-Frank and full transparency and you had clarity, you have to show everything. What they're doing is the MLS was listed that we're going to do, a percentage, and that's what the buyer's compensation is and what the seller's compensation is. Now, I think the miscommunication is the way the media gets involved in it. I'm going to be honest with you. The same thing happened in 2008. It was a big issue when they kept talking rates, and they were talking points and fees and everything else, and it was regulated everything. Well, what are they doing now? You've got a lot of the big media companies and channels are going 6%, no more 6%. We're not going to charge 6%. The seller doesn't have to pay because they feel that they shouldn't pay. Okay. So if you look at it, all right, 6% of the sale price, they're looking at a denomination on there. But the reality to it is the average transaction is anywhere from 3 to 5 that I've seen 2.5 for the buyer, or borrower, the buyer's agent, 2.5 for the seller's agent.
Yep.
And that's it.
There's not a lot of sixes. I couldn't tell you that I've paid 6 anytime.
But when you see that number, it's astronomical, and it's clickbait. We're going to grab it. We're going to jump on it.
I think that's part of
this media, and the way that they're marketing it. I think there's going to be change in this industry because there has to be at this point. It's already totally broadcasted, but we're in the perfect storm right now. And we were in the perfect storm, which led up to everybody jumping into real estate on that realtor side.
Yep.
You had low interest rates and you have values climbing.
Yep.
Perfect storm, and I think a lot of realtors saw that and had friends that were making unbelievable money because you were getting a lot of business. We're still in a seller's market, but this is an involvement. It's evolving right now because once they bring up these disclosures and going back to the amount where they listed on MLS, you're not allowed to list that anymore. So what is that going to do? Well, you see another clickbait that's out there. They're saying that when they implement all this, values are going to drop. This is all clickbait. This is all things to get you to look and get you nervous, see what's going on in the industry. The reality to it is there's going to be change, but it's going to affect in different markets right now, and this is what I'm going to go with. So I have a buyer's agent, and I'm helping my buyer find a home. Well, if it's not listed with cooperative, basically compensation, where you're allowing the seller saying yes, I can pay it.
Yep.
You've got a situation there because who's going to foot the bill? We talked about affordability.
Yeah.
The buyers barely have enough in there. And they want the American dream of home ownership.
Yep. Sure.
And I totally 100% believe in that. And my clients, everything that I've done in 25 years was based upon that.
Yep.
Now you've got facets that are pushing down on that, and this is part of it. So if I have a seller right now selling a home, the new disclosures and the new NAR regulations are you don't have to pay the buyer's agent anymore.
Yep.
Well, okay.
It's going to cause different problems.
So is the buyer's agent working for free? They have value add.
Yeah, totally.
They do a lot. They show the properties. They let them in the properties. They negotiate. They're doing everything that everyone else is. Yep. But now you're not going to expect them to work for free.
No.
So now, how do you get around that? Because we all know, especially when media projects it, what's going to happen. If I'm selling my home, I don't have to pay the buyer's agent. I'm saving 3%.
Yeah.
$500,000 home, I'm saving $15,000, 100%. What they don't realize is the individuals that are affordability back with our consumers and the ones that we pre-approve. Well, they're getting gifts. They're barely making. We got grants. We got the government the administration's trying to do $500 per month for, it hasn't passed or anything yet, but for the next 2 years to try to make it affordable for them. Well, what are you doing with this new settlement? You're throwing it on top of.
Yeah, sure.
So
we got to deal with that. So that's going to be.
So if it's let's just say it's 2 points. It's 4 total, 2 and 2. 2% on a $100,000 loan. It's a lot of money for somebody who barely has the money here.
Yep, who's hitting.
And it's not even where am I saying 100,000? Yeah. The norm is 400. Yeah. So where are they going to come up with the money? So you have a lot of creativity that's coming on in the industry. Do I think brokers agent compensation is going to go away? No. I think what's going to happen is, yes, the DOJ, everybody's getting involved in it because that $418 million proposal, it's not ending yet. What's unique about it is it's only on NAR individuals and some realtors or some of the big realtors. Now, here's the crazy part. If you look at it, they said if you were an indie broker or a brokerage that did $2 billion or more in 2022 in volume, that settlement doesn't cover you. So who's protecting you?
Yep.
And with the billions of dollars they're talking, it's not going to stop. It's what happened when in '08 with the implosion. It starts with a few, and they start with the settlement, and then they keep going. Now, is it going to eliminate? No, it's not going to eliminate. There's value added. Our realtors are unbelievable in the way that they're going to take care of their borrowers. But now, their buyers, they got to turn around and actually show more value added on top of that and show what their worth is, which is, we had to do it.
Yep. They're going to have to start getting creative, and that's where the grit's going to come in and really push
grit.
them forward and really start to think about like what it is as a realtor, what you need to do to shape your buyer for 2024, second half of 2024 and beyond, because you're going to need to, again, I think that there's value in a realtor, and I wouldn't think about it going any other way. And again, if that realtor can help you save $15,000 on the purchase, well, was it worth $8,000 in the commission?
Exactly.
And maybe there's going to be some different structures that work.
So let's just take that mindset. Take the seller. If I'm selling my property and I am set in stone, and you're going to have listing agents that are going to say to their seller, we do not have to pay a buyer's agent. This is where it is, which could be foolish. And what I mean by that is this, because if I have buyers that now have to take on that percentage for the compensation of the buyer's agent, they may not qualify, which basically means you're losing buyers for your property that are there.
Yeah, that's tough.
You know, and then the thing is you can't have it documented on MLS. So before they used to have, you have to put a dollar denomination on it. It has to be documented on a compensation. That, we're talking full transparency, but now that's being eliminated. So on every MLS, it's going to be eliminated, and then it goes to realtor.com and all the other ones. So it's not going to say what that is, which is fine. All it means is your buyer's agent pick the phone up and contact the seller, you know, the listing agent, and say, is there compensation for the buyer? And they say no, they're going to probably move on.
Yep.
You know, and then it's crazy. Now, how's it going to make our realtors stronger? Is a buyer's agent now is going to have a buyer's disclosure. He's going to have a disclosure settlement that represents them, and they're going to do it the day of before they show a property, I would imagine.
Sure.
So this is where the unique-ism is going to be on this, because then you're going to this consumer, and I could relate to a certain degree, because back when, let's say back in the 90s, early 2000s, we used to charge an application fee. You remember? It was an application fee. Yep. So I would charge an application fee, and that the regulations came out, you can't charge any application fees. Well, now the same thing for the buyer's agent. They have to charge that. So when they say to you, hey, it's going to be 2%. Well, you mean if I buy a $500,000 home, that's $10,000?
Yes.
Yeah, you're going to have to pay me there.
Yep.
That's where the issue is, because that seller, or that seller, the buyer, doesn't have that money.
Yeah.
Where are they going to get it from? We're already borrowed. So now you've got, which is a term that was used years ago, more on a buyer's market than on a seller's market, but seller concessions. Are they going to start doing seller concessions? So now, you know, they put a price up, and the seller's willing to pay it, but it's on this amount, and this. There's going to be all these things that we don't know.
That
Nobody
HUD
does.
is going to be updated.
They're going to again. Well, if you remember, with us, on the mortgage lending, we used to have the good faith estimate and the HUD A1. You used to have all that. That was nice and easy.
Yeah.
Then they went into where we are now: loan estimates, CD disclosures, Alt A's, where you got to separate it. I think, and again, this is just my understanding on it. With the lawsuit going in, and they have to change it in July 1st, I think the regulations are going to come down, because the DOJ is involved in it.
Yeah.
Their eyes are on it. And I used to hate to use the word, but blood in the water. There's a lot of money that's going on.
Sure.
And it's always about money. So that's what happened on our end. So I think that's going to be unregulated. And I think they're going to do what we did, just be creative, and more important than anything else, be honest with your buyer.
Totally.
Just be honest.
I think that's 100% the answer.
You know, if
honesty wins every time.
Exactly. If I'm showing you I don't know, 15 homes, 8 homes, and we're doing bidding wars, and I lost this one, but I'm fighting for you, and I'm going through. Do I have a worth? I have a worth.
You definitely do.
The buyer knows that. The buyer
so
knows
it's a matter of education, I think.
Yes.
For the realtors, I think it's their job to become educated in this process and really show their value. And again, you know, you want to do it in a very nice way. Like, you don't want to be like, look what I'm doing for you, but like they have to understand, like, this is what comes to the table when you're hiring me as the buyer's agent. This is what you can expect, almost like a bill of rights.
Exactly. And you know what's crazy, and I tell all my loan officers, I tell everybody that I work with, the craziest thing is, and I understand it, people are afraid to tell you something that you're not going to want to hear.
Yep.
To me, number one rule, honesty. I'm going to tell you something you may not want to hear, but I'm going to tell you that because this is the way it has to be on where we're at.
Bad news doesn't get better with age.
No.
So
and you can't tap dance around it.
No,
you know,
you got it. So you have to. I think there's a lot to come on this. I think that this is just like the first.
It's a tip of the iceberg
and we're going to continue to learn, and people are going to have to navigate, and they're going to have to.
Yes.
They're going to have to be gritty, and they're going to have to get
the grit is coming into play on this.
They're definitely going to have to figure it out, and I think you're going to have a little bit of a shakeout. I think you're going to lose some of these part-time guys that
happened in 08.
And I think it's a necessary.
Almost 2/3 went.
But I mean, when you think about even real estate in general, with a lot more starting at Zillow and a lot more starting at Redfins and Realtor.com, you know, the process has changed from 20 years ago when you used to spend a Saturday with a realtor and they used to take you to 12 houses. So, you know, as technology has come into play, I think that there's a benefit to technology, but there is a benefit to that realtor. So it's kind of trying to figure out. They got to learn how to dance. They have to figure out how to make it work. I mean, and I think there's a lot of interesting things that are going to shake out in 24 and into 25 with this availability, inventory, with affordability, to see like how this all kind of dances around.
Right. No, I agree with you because inventory is a big issue too, and that's the second part of the AI was the inventory issue. You know, supply and demand. We have so much demand right now.
Yep.
We have buyers. Buyers want to buy.
Yep.
There's just not a property. And then when a property does come on, you know,
it's quick.
It's priced right, and a lot of people are going for it.
Yep.
You know, and people, it's almost like you're trying to win a trophy at times.
Yep.
You know, they're like, I got to have it. But you're overextending yourself.
But people get irrational when
irrational.
You know,
it's an emotional buy.
It's an emotional buy even when you think about bidding and you know times you bid on something, you're like, well, afterwards, what was I thinking? So if you just get into that moment and you dig your feet in and you're not going to let go. And again, I think that's the competitiveness in people.
It is, but sometimes, and this is risky for even me to say on it because I'm in the business where yes, I have guidelines, and if you're approved, you're approved. But there's things in my mind that I know are right. And things that I don't feel right.
Yeah.
You know, if you love that red Ferrari out there and the payment's $3,500, and guess what? You could afford it with your cash flow. Is it a smart investment?
No.
No.
Never.
No. It's an emotional buy. But that's the thing. We were brought up that way.
Yep.
We were also brought up that you put more money down, and if you can't afford it, you gotta take a move. I mean, going back where we were talking when we both bought houses. It was $1,000 all in, $1,500. I know that's no more. I get it. Even when rates drop down to twos, you know, I get it. The problem is you take the same young new home buyers.
It's hard.
It's hard, and they got two incomes, and now you take principal, interest, taxes, and insurances, and their payments north of $3,800.
Yep, and it's hard because you know I think financial is how people start arguments. Like. When you think about it, like that's
divorce,
and I think financial stress. So, you know, I hope that this kind of shakes itself out in time. And I think, you know, as time goes on, it will shake itself out. I mean, it's just a matter of getting through it. And it's a little bit of a hustle. It's a little bit of a, you know, everybody's working. And, you know, I think the realtors are working hard. I think the buyers that are coming to the table, they want some. So, I mean, I think as time goes on, that'll open up. And, you know, that should hopefully, you know, help this problem because I think it does bring on undue stress and things like that.
Yeah. I mean, and it's crazy. You know, a lot has transitioned. Even now, that American dream of home ownership that we took pride in. You know, I'm proud to own my home. I'm proud about that. And I know a lot of people are. But there's a lot of millennials and new first-time home buyers out there that they're not getting the benefits of.
Yeah.
And the crazy part is, with what transpired in the industry, with the rent moratorium going away, rents went through the roof. You can regulate rent, and that's the crazy part. So as values or mortgages go up, rent is going up because they're keeping it in a line. So you have individuals who are renting for the next 3 years, and if you do the math on that, you're throwing money away.
Oh, I know.
And you're not getting it back.
That's
you're not.
the tough part. And again, I think you have different issues that go on with that. So,
Yeah.
That's a whole different podcast.
I agree.
There's a whole nother topic on there. But, I do appreciate that you came on today and you educated the audience on a lot of things that are going on. I like your AI your AI reference.
Yeah.
So for the visitors, just let them
Yeah.
know where they can find you on your website and social media, so that anybody that wants to learn more and continue this conversation with you can do that.
Okay. With Nations Lending, 325 West Water Street, right in Toms River. Local lender. Been doing it 25 years. You can reach me, best thing, call me directly, 732-330-7749. My email, everything, look at Facebook, I'm all over the place. After 25 years, we jumped in it early with the social media.
Sure.
So
That's great.
It's a good thing, But just to recap on that, Nor, I think it's just a speed bump right now. Is it going to be more speed bumps? Sure. But the dominance and the predominance of our realtors out there, we deal with awesome realtors in Ocean and Monmouth County and New Jersey. And there's ones that are going to take this and run with it. You had some that were on your show here, I saw.
Yep.
And I think it's going to be a learning curve, but they definitely have the value and the value added to make it happen.
Awesome. Thank you again for coming on today.
Absolutely. I love it.
This was great.